Imagine trading Forex with $200,000 capital. Just imagine how much money you can make from the market. And that's basically how I've been trading pretty much the past 2 years, because only this year I've made well over 6 figures trading Forex. And I did that without risking my own money. How is that possible? The power of prop firms. In today's video, I'm going to explain exactly what prop firms are and why are they so popular nowadays, and how you can take advantage of that, and how that is the best and way smart way to trade Forex in 2025. This is just the first video of my prop firm series. I'm gonna teach you everything from how you understand prop firm until how you can become profitable trading prop firm. Are you excited? Let's dive into today's video. So the first question here is, what are prop firms? Prop firms are basically trading companies that give you their own capital to trade with, and then if you're able to make money, then they pay you your profit share that you've made on their account. Assuming right now a prop firm gives you $100,000 account, and then you trade, assuming you make like $1,000 profit, the prop firm can now pay you a profit split of that profit you've made on the account. Maybe the prop firm has 80% profit split. That means you get 80% of that $1,000 profit you've made on the account, which is about $800 profit. But the good thing is that $100,000 that prop firm gave you, it's their own money, it's not yours. So if you lose some money on that $100,000, technically you haven't really lost anything. Now the next question is, how do traders use prop firm, and why would they want to use a prop firm? You would want to trade with a prop firm instead of trading your own personal account because maybe you are very low on cash. Assuming right now that you start trading and you only have $100 in your bank account, but you want to start making somewhere from $500 to $1,000 monthly trading Forex, you know very well that $100 is not enough for you to make a steady income from Forex, especially if you want to have a very good risk management. That's why if you try to get funded with a prop firm, then the prop firms allows you to get a bigger capital, like $10,000, $50,000, $100,000, even $200,000. But all of that with a small evaluation fee you have to pay. Let's look at that case where you have $100 in your bank account. Instead of depositing it in your broker to trade, you can instead take about $55 and then go to a prop firm website and buy a $10,000 account. That allows you to get what? A $10,000 bigger account to trade with. And all of that allows you to turn your skill into an income, because you can be a really good trader, but if you don't have enough money to trade and make money, all you have to do is what? Get funded with a prop firm and then get a big account and start trading and start making money. You can take advantage of that skill you have if you have a very big account size, which a prop firm can offer that to you. So that's why traders are using prop firm to get funded and make money from Forex trading. Now the real question is, how are prop firms able to give you large amount of capital? Where do they even get the money from to give it to you and then pay you if you make profit? Here is how everything works from scratch. Basically, prop firms, they know that 90 to 99% of Forex traders lose money trading Forex. So what happens is, before a prop firm gives you a real account to trade and make money, what they do is they give you an evaluation account. An evaluation account can have anywhere from 1 phase to 3 phases. And that demo account, it would require you to pass that phase 1, making about 8% of the account size. 8% on 100,000, that means it's an $8,000 profit. So you make $8,000 to get your phase 1 done. And after you do pass phase 1, then you have to pass your phase 2, required you to make 5%, which is about $5,000 on a 100K account. So after you making 8% on phase 1 and then 5% on phase 2, then you have now validated all the challenge the prop firm gave it to you. So after that, the prop firm now give you a real $100,000 account to trade with. But before the prop firm even give you that challenge account, you have to pay a fee for it. You can buy maybe that 100,000 challenge account for probably somewhere around $400 to $500, and then if you are able to pass all the challenge, then you now get a real account that you can scale up and then make profit and get paid. But where do prop firm actually get all the money to give it to you? First thing is, they understand the statistic in Forex trading. They know that 99% of traders lose money. So as they have that statistic, what they do is when you lose a challenge, they take that fee from you. That fee, if you buy an account right now and you lose the account, that means that the money used to buy the account is gone. You don't get it back. The more challenge you lose, the more money the prop firms makes. So some traders keep losing challenge, so the more money the prop firm makes, and then some traders which are actually profitable end up passing the challenge, and then when they do make money on the live account, all they do is they take the money from the challenge fee lost by other traders, give it to you as a payout. So any money you make from prop firms are basically other people that lost their challenge trying to pass the prop firm challenge basically. So that's how the whole idea behind works. And again, even that funded account you get is really not a real funded account. It's just a demo account, but when you do get a payout, basically they pay you the challenge fee of other traders losing. So this is basically how prop firms works. You buy an account, you try to pass. If you don't pass, you lose the money. You buy another account, you pass. If you do pass, that's perfect. And then when you do get a payout, then they pay you with the challenge fee of other traders who have lost their challenge. Easy peasy. So now, how do you take advantage of that? The benefit of you want to trade with prop firm is, first, is you being able to scale up. You can trade with 100,000, 200,000, 300,000, and that's only one prop firm that can give you up to $300,000 in trading capital. Now let's imagine how much capital you can get if you get up to 2, 3, 4 prop firms and you trade with all of them at once. So there is a lot of advantage of you trading with prop firm, such as having 6 figures trading account, and then you make money, you get paid. And the second thing is the high profit split. I mean, if you make $10,000 and if you get 80% profit split, then you're getting $80,000. Imagine that it's not your account you are trading, but you're still getting 80% of the profit you make. That is, I mean, really high. And some prop firm, such as FundingPips, gives you up to 100% profit you've made. That means that the prop firm does not take any money from you. And then the last thing is, prop firms basically teach you the discipline and the risk management. Because if you have only $100 or $500, it's going to be difficult for you to try to maybe risking 1%, 2% per trade. But if you instead have a prop firm account, assuming a $100,000 prop firm account, you can start risking 1% per trade, which is about $1,000 per trade. So it teaches you how to risk small, and how to have a correct discipline and risk management, which is really good. Like, it shapes you to become a better trader. So in case in the future, if you end up having your own personal $100,000 or even $1 million account, then you know that you have to maybe only risk about 0.5 to 1% per trade. But if you never really traded prop firm, even if somehow in the future you end up getting a $1 million account, you might just end up blowing the account just on one trade. That's why prop firm teaches you the discipline. It teaches you the risk management. It's not just about scaling up. It's about becoming a better trader. But all I said here, we don't just have advantages without disadvantages. We also have some disadvantages of trading prop firms compared to you trading your own personal account. And the first thing is the strict rules that you have to follow when you trade with prop firms. Basically, when you get funded, not even before you get funded, even on the challenge phases, you do have some rules, such as you have to make 8% to pass phase 1, and then you have some drawdown rules where if you lose more than maybe 10% of the account, then you lose the account. So these are some of the rules that the prop firm put into place for you to follow. So you have more strict rules than you trading your own personal account. And you can also have rules on the live account, such as the drawdown. You can also have rules on news trading, such as the prop firm not allowing you to trade high impact news. But again, I find it a really good thing, because I mean, that teaches you to have a really good risk management plan. You shouldn't be full potting your account on every high impact news. So yes, you do have some strict rules put into place by the prop firms, but to me, I just think it's just to shape you to become a better trader. And the second thing is, not every prop firm is trustworthy. Not every prop firm is prop firm that you would want to trade with. The advice I would give you guys is, if you want to choose a really good prop firm to trade with, you can check out my video on prop firm match here. And if that's not the case, I can just tell you which prop firm I trade with, because I wouldn't just tell you to go and trade with the prop firm if the prop firm doesn't pay you out. I hope you understand. So for you to get a really good trustworthy prop firm, I trade with them first. If I do get paid, then I make a video for you telling you guys that I got paid. I hope you understand. So if you want to trade with a prop firm that would maybe advise you to trade with, you can probably try trade with FundingPips, which I think is really good prop firm, and they do pay you out. Again, we have a drawback here, which is the trustworthiness of the prop firm. Some prop firm may just not pay you out, which is again a bad thing, but it depends which prop firm you actually choose, you know. And then the last disadvantage, I think, is the upfront cost. You know, if you want to get a challenge account, before you get the live account, you have to pay the prop firm some amount of money for them to give you the challenge account. But again, if you do lose that challenge account, you fail the challenge, then you are not gonna get that challenge feedback. The challenge fee is not refundable if you blow it. I hope you understand. You can only get the challenge feedback if you do get past the challenge, and then you do get a payout on the live account. So you can get it back, but there's also a small risk of you losing that challenge fee if you then pass the challenge they gave you. If you do fail, then yes, there's a high chance for you to just not get that challenge feedback. So this is pretty much it. Prop firms are basically companies that allow you to become a very serious trader by having a really big capital to trade and make money for a living, and then just, you know, enjoy your life. So this is just the introduction to prop firms. In case you guys don't know about prop firm, I hope this video cleared everything to you, and in the next video I'm going to explain exactly how to buy your first prop firm challenge, and I'm also going to take you through exactly how you can pass without failing your prop firm challenge. If you're excited, make sure you subscribe to my YouTube channel right now, and then you activate the notification bell and you wait for my next video, exactly how you can become profitable trading with Forex. And by the way, next week I have a $2,000 payout request with a prop firm called FundingPips, and I'm actually gonna make a video how you can request the payout as well. I just want you guys to become what? A prop firm god. I hope you understand. So that would be pretty much it for this video. If you enjoy, make sure subscribe, make sure you like, and see you guys on my next content.